You work hard to provide for your family today and tomorrow. But if you're like most people, figuring out how best to provide for tomorrow can be a confusing proposition. Personal finances, especially investing for your family's future, is one of the most challenging and often intimidating tasks one has to deal with. But the world of investing can be a lot simpler and a lot less scary by finding a wise and reputable investment advisor to guide you through the process.
Over the last 10 years, we've had two declining marketplaces and one which cut the market in half. People have lost faith in the market because of the volatility that exists. Yet in 1999, ironically, at the height of the last growth stock bull market, people were very optimistic, perhaps at the wrong time. Volatility still creates uncertainty, and I think that's why people are still wary of the marketplace.
Thomas O. Putnam is founder, chairman, and chief investment officer of Fenimore Asset Management, located miles from Wall Street in upstate New York. He says there are some simple steps we can take before jumping into the stock market.
An investor first must learn how to save. Then an investor should have at least 2 years of income on hand and at least 6 months of cash before he contemplates investing. He should look for good, reputable, understandable investment vehicles, like mutual funds, and invest in them consistently over time for the long term.
Research shows that the average investor significantly underperforms the overall market because they let their emotions get in the way of rational decision-making. Fenimore's Director of Research, John Fox, says investing can be, and should be, understandable and rational.
Well, the basic principle is to not let your emotions take over and change your decisions or your investing behavior. Unfortunately, we see this a lot in the mutual fund industry. We see the majority of investors buy funds after the prices have gone up and sell them after the prices have gone down because they're letting their emotions take over. And what you want to do is to buy low and sell high.
Thomas Putnam founded Fenimore in 1974 as a means to manage family money after they sold Fenimore Fabrics, a textile company named after famous local author James Fenimore Cooper. During that time, the Dow Jones Industrial Average declined more than 50%. However, the Putnam family assets posted modest gains during the same time period. Word of Tom's success spread, and soon he was investing money for friends and local businesses, applying his unique method.
First, they must be understandable. We look at businesses and not stocks. Secondly, they should have strong financials. They should be run by a capable management team that's honest. And lastly, it should generate enough cash profits to make the investment worthwhile. That's what we do all day long when we look at businesses to invest in.
The Fenimore team knows that most investors want to protect their assets and minimize risk.
First, you have to define risk. And the way we do it at Fenimore is defining risk as a permanent loss of capital. We try to minimize that risk by only investing in financially strong companies with good balance sheets and cash profits and buying them at the right price.
The firm manages separate individual and institutional portfolios and is the investment advisor to FAM funds, the FAM Value Fund, and FAM Equity Income Fund.
We have a very diverse client group. We manage money for some of the largest financial institutions in the country. They would be household names to many people. We also invest for pension plans and charitable endowments. And then we have 18,000 mutual fund shareholders that invest in our two funds, and they can start investing for as little as $500.
There's always opportunity. If you look back at 1973 and 74, the market was cut in half. We had hyperinflation after that. And in 1989, 90, and 91, we had the S&L crisis. Then in 1999, we had the growth stock bubble. That was still a good time to invest. We think today, even after the financial crisis, that this is equally as good a time to invest, if not better.
Volatility is part of the stock market. We can't eliminate it. The market is going to have good years and bad years. But there is a technique that you can use to make volatility work for you, which is dollar cost averaging, where you invest a fixed amount of money on a periodic basis, for example, $100 every month. And this keeps you in the market and it keeps you buying when prices are low.
Fenimore's mission is to provide long-term investment growth for its investors with a commitment to quality and dedication to excellence. The staff is guided by the highest standards of ethics, morality, and integrity.
The Fenimore Quilt Square, which is our logo, is a reminder of our heritage and our location in the leather-stocking region of upstate New York. It's also a connection to a tradition of caring hands, doing careful, detailed work, creating something of lasting value. And that's our stewardship to the people whom we serve, our investors, in protecting their wealth.
What makes us different is personalized service. All of us that have the experience of calling a large company and being lost in a maze of voicemail, that doesn't happen here. You call our toll-free phone number, a person answers the phone, and we have 6 people in our shareholder services department that you can work with and get to know on a first-name basis.
Investing doesn't have to be complicated in order to achieve long-term financial success. Keeping it simple is the key. To learn more about Fenimore Asset Management, call today or visit famfunds.com.